What makes you so sure? Because we have started to hear more warnings that perhaps inflation could be more structural than the market currently anticipates. So just give us the case of why you aren't so concerned. What looks so transitory?
Yeah, so I mean, if we look at some of the more structural drivers, so obviously you've got the base effect from last year, which is temporary. We've got some supply bottlenecks in both the labor market and the product markets, again, which we think is temporary. But if we look at more longer term drivers, productivity has soared in recent times. So actually in Q1, unit labor costs actually recovered a little bit. Unit labor costs actually came down a little bit in Q1 despite strong wage growth. So we're seeing that coming through. The money multiplier is still very weak. So that's something that usually is an indicator of inflationary pressures, and it's suggesting deflationary pressures, if anything. And bank lending is also, as a corollary to that, falling at the moment after a spike last year. So overall, we think these drivers suggest that inflation, yes, we're going to see this play out in the coming months, but over sort of a 6 to 12 month basis, we're not concerned about inflation at all.
Let's talk about what it means for your equity positioning, because I understand that you prefer Europe over Asia at this stage. Why is that?
So we just think they're sort of in the middle of this recovery from the coronavirus outbreaks, right? So obviously we had the UK and the US sort of leading the way in terms of vaccinations. Euro area now catching up very, very quickly with that. So that's leading to upward growth. We saw the ECB revise up their growth forecast. The OECD has done likewise for the euro area. Earnings growth estimates are also being revised significantly higher. And we don't see euro areas as being over-owned in the slightest. If anything, they're slightly under-owned. So from that perspective, we still think there's a significant amount of money going into Europe. And obviously, we do have the euro area as a value tilt, and we are overweight value versus growth at this stage. So all of that fits into a theme for us that maybe over the next 6 months or so, euro area could continue to outperform.